Money FM 89.3. Best of breakfast. Companies to watch.
All right, today's Companies to Watch, we are heading to India.
That's right. Welcome to Companies to Watch. That's where we find out whether the stock or a topic it's going to be hot or not.
All right, Danko.
Okay, Ryan, we're turning over to India's largest listing this year at 155 billion rupees or 2.3 billion Singapore dollars.
Oh, is it the largest listing in India?
Yes, potentially for this year, in fact. So Tata Capital, that's the company they're returning to. It's actually a Tata Group's non-banking financial company. So I'd like you to think more about loans, housing finance, and SME and consumer lending, wealth distribution, as well as a growing green finance arm. So essentially, it doesn't exactly take your salary deposits like a bank. How it functions, it's basically it borrows from markets and banks and lends onward, faster, nimbler, and of course, often in underserved niches.
Right.
So yes, that is the biggest news for this week. We're seeing how India's largest IPO of 2025 is taken up quite nicely, having fully subscribed on the final day, led by institutions, putting in about close to 523 million US dollars.
Yeah, I'm not surprised because the Tata name is huge in India. And like you've outlined, it's got its finger in many industries.
That's right.
So it has now a potential disruptor of sorts in the financial markets.
Yeah, so if you look at the price band of the latest IPO, it's roughly ranging from 310 to 326 rupees, with fresh issue of about 210 million shares. Of course, Reuters currently pegs its valuation up to close to 15 billion US dollars. So by loan book or asset under management, Tata Capital is now India's third largest NBFC, that's non-banking financial company, and coming after Shriram Finance and Bajaj Finance. So the group has been simplifying and scaling, especially amid, their combination of Tata Motors Finance into the fold back in 2024 and are subjected to approval, of course. But across the consumer and SME lending, housing finance, vehicle finance, Tata's capital focus really is in retail and SME rather than big corporate balance sheets. So the recent IPO note puts their asset under management around 2.33 trillion rupees, which with about 87.5% in retail and SME. So management did highlight that it has a triple A rating, a diversified borrowing mix, and of course a push into digital underwriting to keep its credit costs contained.
Very nice.
So let's talk a little bit about its performance and skill and growth. Its total income for financial year 2025, it's about up 56%. Profitability and spreads in terms of its net interest margin is currently up by 5.1%. Return on equity up by 12.6% thereabouts. They've also seen consolidated AUM growth through 2023 and 2025. So competitors include the likes of Bajaj Finance, which is considered to be a consumer or SME juggernaut, with its recent results showing strong loan bookings at about 23% growth year over year. Shriram Finance, on the other hand, it's the largest NBFC by AUM. It has, its mix skewed to vehicle MSME lending. Shares are rather volatile on profit misses, especially expectations were slightly higher for this year. So taking a look at how it compares, Tata Capital's NIM, that's net interest margin, is structurally lower than Shriram's high-yield vehicle book, but more comparable to diversified retail peers. Profitability leans on scale. Costs of funds are currently at about AAA rating, credit discipline, and not exactly ultra-high yields. So it may seem on a valuation level like a more promising catch. Well, let's weigh in on the bull and the bear case then. Now, first things first, it has good distribution, branding, and of course the AAA funding, which might support the investment case and makes it also what some may call a compounding engine. Right? Tata's trust and multi-product cross-sell plus its AAA rating would help to lower the cost of money and of course support NIM durability. Now, their expertise in retail and SME with digital underwriting as well is yet another factor that you may want to consider. After all, their loan growth is broad-based and increasingly data-driven. And I've mentioned how their 2025 income is currently up about 56%. Asset under management is also running at about 2.33 trillion rupees, showing how their operating leverage is kicking in as it continues to scale. So cyclical tailwinds and clean pipeline is also yet another factor. After all, India's credit cycle and formalization trend continues to favor well-rated NBFCs. On the other end of the spectrum, Ryan, we've got the bear case where, funding costs and margin pressure is going to be another factor that might weigh on their margins. Money Control flags about 5.1% of their NIM with rising funding costs and thinner provisioning buffers. So that also means that if rate volatility returns, the spreads could likely compress. Now, cycle sensitivity in banks are yet another factor to consider as well. After all, they are a wholesale funded company. So in that case, in a liquidity squeeze or risk off, banks get deposits first. And that can likely lift their cost of funds, which slows growth and, of course, puts pressure on Tata Capital's ROE. Peer pressure and credit quality is yet another thing to look at as well. After all, sector leaders have seen higher credit costs in certain unsecured pools, and profitability misses at Shriram does show how fast sentiment can turn if provisions rise. So having considered all the factors, Ryan, it's been a wealth of information here, but it does bring brand trust, skill and breadth. So I'm going to give it a hot for Tata Capital.
All right.
What say you?
It's all about timing when it comes to IPOs, right? And this is really seeing India on a bit of a momentum in recent times. So it's now the world's fourth largest IPO market. In fact, it's seeing competition this week itself. So Tata Capital is up against tomorrow's IPO, another blockbuster from LG Electronics India unit at $1.3 billion. So there's going to be some competition for capital just this week alone. And some people are saying, the LG Electronics IPO looks a bit more attractive. So you might see some shine being taken away.
For sure. But I think if anything, this also brings to light how the IPO might reinvigorate some kind of optimism and money movements back into the India's market. So that would pretty much wrap it up for analysis of today's Stock in Focus, Tata Capital. 88550893. Text us and tell us whether you think it's a hot or not. Okay, Ryan, fun facts. Did you know that Tata Group was founded as a private trading firm in 1868 by Jamsetji Tata?
Of course.
And at that time, he dreamed of achieving about 4 goals: setting up an iron and steel company, a unique hotel, a world-class learning institution, and a hydroelectric plant. Fast forward a couple of decades or maybe a century, Tata Group has over 100 operating companies across various sectors in over 100 countries, of which 29 are publicly listed. So how did Tata Group's CEO present his employees with a fat bonus check?
How? Through a meal?
Ta-da! And that's all we have for Tata Capital.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
Money FM 89.3